Good afternoon. My name is Dennis Brooks. I'm a graduate student here at the University of Alabama at Birmingham in the Colott School of Business Tutoring Lab. You can reach us at colottutorlab@uab.edu at any time, or you can arrange for individualized Skype sessions at Colott Tutor Lab on Skype. Today we're going to talk about analysis of financial statements for AC 200. Financial statement analysis applies analytical tools to general purpose financial statements and related data for making business decisions. Building blocks of analysis. We focus on four basic areas of inquiry when we're analyzing our financial statements. Liquidity and efficiency. That's the ability to meet short-term obligations and to generate revenues. Solvency, the ability to generate future revenues and to meet long-term obligations. Profitability, able to provide financial rewards sufficient to attract and retain financing. This is a big part of business because you don't always necessarily have the cash on hand, so you usually have a money credit line through your bank, and profitability plays a big part in that aspect. Market prospects, the ability for your company to generate positive market expectations. When you apply the building blocks of financial statement analysis, involves determining the objectives of the analysis and the relative emphasis among the building blocks. Information for analysis. Some internal users and regulatory personnel are able to receive special reports for their usage, but most, that's supposed to be external, not eternal. Users rely on general purpose financial statements that include the income statement, the balance sheet, statement of stockholders' equity or the statement of retained earnings, statements of cash flows, and notes to the above statements made by management. The standards for comparison. Typically, you use one of various standards or metrics to compare your company's results by. Inter or intra-company. You compare the company's performance against its own prior years or historical performance. You may compare it against a competitor. One or more direct competitors of the company can be used as a metric. For example, Pepsi-Cola could compare its profitability against Coca-Cola to find out if it's going to be able to stay competitive. Or you can use industry standards. Industry standards are gathered and made readily available by many services. Tools of comparison and analytics. These are just a few of many available tools available, but they hold crucial importance in the hands of external users. A big one, horizontal analysis, comparison of a company's financial condition and performance over time. In my personal opinion, this is one of the most vital sources of analysis. It can help identify trends and relationships between accounts that can be early warning signs of fraud or mismanagement. And I'm sorry, that's supposed to be signs, not sides. Vertical analysis, comparison of a company's financial condition and performance to a base amount. Again, useful for spotting trends in relationships that can be a cause for concern. Ratio analysis, measurement of key relationships between financial statement items. Trend analysis is a form of analysis that can reveal patterns in data across successive periods. Comparative statements, comparing amounts of two or more successive periods, often helps in analyzing financial statements. This is most oftenly used in comparing horizontal analysis. Horizontal analysis can show you relationships that really shouldn't be there, and that based off of what you have in your existing notes. Common size statements express the items as percent changes of a base amount, which for common size statements is usually total assets. The purpose of all of these analytical tools is to help identify trends or issues before they can become problems. Your book will have lots of different ratios and methods for determining information. So I will leave that to your text to go over in more depth, as I do not know what ratios your professor will consider the most crucial or will be using the most of. But I can tell you from my perspective as a forensic accountant, horizontal analysis is an extremely important tool for analysis, because it allows you to look at trends in your company's historical behavior and helps you to associate those trends with items that may not directly relate to each other. Anyways, again, my name is Dennis Brooks, and because of the type of chapter this is, I'm not really going to get into writing down all of the ratios and things such as that. You've got about 6 pages of that in your notes, and you've got notes in your text that put numbers to those that would do far better explaining it than I would. Again, my name is Dennis Brooks. I am a graduate student here at the University of Alabama at Birmingham, and you can reach us at any time at Collat Tutor Lab at uab.edu. That's COLLATTUTORLAB, Collat Tutor Lab, one word, at uab.edu, or you can arrange for Skype sessions on Skype at Collat space Tutor Lab, one word, on Tutor Lab. Thank you.